Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Wednesday, September 16, 2020, and the time about 6:40 at night. Well, what a mixed day. You see it behind me in all the colors, my Christmas colors, as I like to call them. Markets up, markets down. And what we did today is we had the FOMC financial monetary meeting come to an end, a monetary policy statement, and then Fed Chair Powell talk. We had other economic data, but that was the lion's share of what's going on. And as I see it, the Fed changed things. They're, to a degree, they're talking interest rates, not really moving far from where they're at for the next 3 years into 2023. Inflation, real problem. They're saying that they need states to spend more to complement what the Fed has done so far. They say they're not out of ammunition. They say that employment is a problem because in order to get the inflation cooking again, they need employment numbers to keep falling. They changed their unemployment rate at the end of the year closer to the 8% number. And it didn't do too much to the markets one way or the other. They had their normal algorithms back and forth, but by day's end, not an awful lot here. If the market drops from here in XLK, this 110.47 area, there's still a gap there. That could be what the market wants to fill. When you take a look at the swing line study with the action, in order to negate the downtrend, and it is in a short-term downtrend, it's got lower highs, lower lows. You have to take out 117.30. 117.31 print negates it and actually turns the swing line up when it's hit. The resistance in the market is 118.92, the 18-day moving average of closes. So even if you knock the shorts out of their hold on the market at this point, you've got to get back and through that number. It's about $1.60 higher. And it wouldn't be a buy until, in my opinion, you close over that number. As for looking at the Bollinger Bands, if you fall down, the Bollinger Band now fits very nicely in with where the gap is in the chart in that 110.47 area. So the two tie together, and that gives me reason to think, gee, that might be where we're going. And then my whole plan gets thrown out because we're so oversold. Now, oversold doesn't mean you can't go lower. It just stops, in my mind, new selling from hitting the market based on chart action. They'll need something else if that's going to happen. In SMH, you've stalled out. First of all, you negated the downtrend when you took out 117.31. And just like we're talking here in XLK, the objective was the 18-day average, and look what it's done. That's where it's fighting, and the market is now having a rough time of mounting anything. In the industrial sector, what do I teach you here that the first time happens when you hit a Bollinger Band top? That's where I think the pros take money off the table. That does not mean they had to give up everything, but I doubt they'll let the market get under today's low and be comfortable with that position. At the same time, you are not overbought. Neither number here is over a 70 reading, which is what I require for that. But getting over a Bollinger Band on the first attack, very, very difficult. On the energy sector, I was wrong today on the whole energy sector. You turned these markets. You came back and made a higher high. Now, eventually bear trends end, and in my mind, this one didn't start a bull trend. You ended this whole leg of the trend down. You lost the embedded reading. In order to get it back, you have to drop right away in the morning and stay down. The resistance area should be 34.76, and there's no buy signal here. Ending a downtrend doesn't start necessarily an uptrend. In the NASDAQ, first thing my eye sees is an oversold reading. Any numbers that are under 30 without both the K, which is the red line, and the D line of the slow stochastic going sideways under 20 for several days or more is just oversold. So I see the bear trend. I see the bears are in control. What breaks the pattern? Breaking it is if you take out 280.40. So if you take that number out, get to, let's call it 280.50, well, then I'm going to be looking for the market, possibly make a run to the 18-day average. And if it can settle over 284, let's say the 20 level, then I'm friendly in the marketplace. In the emerging markets, I still maintain the friendly part that I saw, but now they're too overbought. Again, I'm going to repeat. think of a checklist, and if one part of the checklist doesn't fit in, you back away from a trade. Even with all that good planning, you're going to have losers, you're going to have winners. It goes both ways. But you don't stand in front of a train, you don't have to. And this is just saying, hey, I'm overbought, I'm stuck in the Bollinger Bands, I'm more or less going sideways. Be careful. In GLD, I've had a problem, and I've mentioned it here, that I don't know which is the right low, and that's important to me. What I can tell you is the market went up today to 185.01. The upper Bollinger Band is 185.33, couldn't quite get there, and the market stalled out in that general area. Still don't know what the trend is according to the chart action. The gold miners got up yesterday to the upper Bollinger Band, and they're failing at that number again. Overbought as can be, sideways action. Could this be something that sets up a trade bottom and starts breaking out? I'm always aware of that. There's nothing on this chart that says be short. There are parts of it that are saying don't be long now with the overbought and hitting the upper Bollinger Band and stalling. TLT threw out a bearish picture today. You have an outside day down, giving you lower highs, lower lows, momentum turning down. Until today's high is taken out, be it tomorrow or the day after, I think the bears grabbed control of the market, and we'll see if they can do anything. You haven't been able to get to a lower Bollinger Band since the early part of August, which is over a month ago, but you've really just been going sideways. Churning is a good way to say what this market's done. Hasn't offered big money one way or the other. And again, a problem in the euro. The euro looked good up until yesterday when you had a pattern of lower highs and higher lows. It looks bad today when it takes out this low, could be headed down to the lower Bollinger Band, but again, it's not mounting a lasting charting picture. You're still very much sideways. So in summation, here we are mid-September. There are more charts going sideways and nowhere than there are charts breaking out in the spiders and the ETFs to trends one way or the other. September is often a nasty month for traders. So far, in my opinion, proving to be the case. Remember, in the morning we have the Bank of England, the Bank of Japan. We're going to get their monetary policies. We write about all this in our market research, be it the metal markets, the stock indices, the energies. If you haven't seen what we do, we'd like to drop it in your email box. Just go to our website, take a look under the word research, fill out the forms, we'll get it flowing to you. I'm Ira Epstein. You have a great day. I'll see you tomorrow.